Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is positional analysis. Planning. I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And just to be clear, I will be talking about setups and underlying assets. And those setups can be taken any number of ways, with futures, shares of stock, or options. My analysis is based on the options market, and the setups again can be taken with futures, shares of stock, or options. Questions and comments are welcome, and I will be watching the chat in Options-Doug chat channel in Discord, as well as the chat on YouTube for your questions and comments. Hector, good afternoon to you as well. Glad you're here. My agenda for today, I'm going to go over, first of all, news items, economic data and events for today and the rest of the week. I'll go over my positional analysis, and then I want to do review some setups from today as well as one from yesterday afternoon that was setting up right as my session was finishing. And then we'll take a look at the live market. All right, let's get started. First of all, news items, economic data, and events. The primary events for the week have been the testimony from Jerome Powell before Congress yesterday and today, and really the gist of it appears to be that Jerome Powell is looking for a potential more rate increases later on. All right, let's get started with positional analysis now. And I'm going to take a look at some charts. I'm going to start with the S&P 500. This is the S&P 500 futures in Bookmap, showing another range day today. And before I take a closer look at this chart, I want to take a look at a larger time frame. I'm going to start with an SPX chart. This is in Thinkorswim, showing this is a 30-day 1-hour chart. Again, this is just SPX, and I have a number of levels on this chart. Let me point out the key levels. Draw your attention to, first of all, the dashed purple line, showing the lower and upper weekly expected move. This is based on the options market. And note that SPX has been trading down just around the lower weekly expected move. And then this dashed blue lines are showing the lower and upper daily expected move. So this is for the day, and SPX is trading inside that range, above the lower daily expected move and below the upper daily expected move. There are also some spot gamma levels, key gamma levels on this chart. First of all, here's the put wall at 4,000. That is the strike with the largest net negative gamma that can be expected to act as support. And the next level of interest is the volatility trigger. That is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, they have to trade against price to hedge their delta exposure, and that tends to subdue volatility. And right now, SPX is trading just slightly above that level, above the volatility trigger. The next level of interest is the 4,400 level, and that is the absolute gamma strike. That's the strike with the largest absolute negative and positive gamma. And then finally, the call wall at 4,500. That is the strike with the largest net positive gamma, and that can be expected to act as resistance. And as far as shifts in levels go, for the SPX, the volatility trigger did shift higher. So it has been shifting higher all week, or the last couple of days, from 42.95 to 43.10 and now 43.55. So again, SPX is trading just above that level. Let's take a look at one other chart in Thinkorswim. This is SPX. This is a 1-day, 1-minute chart, just showing the levels that are in play for today. So the dashed blue line showing the lower and upper daily expected move, and then the purple line is the lower weekly expected move, and note that did act as support earlier today. And then here's the volatility trigger at 43.55. SPX is trading slightly above that, and that level more or less acted as support this morning. All right, so Sampan asked, is Spotgamma provides the SPX lower and upper weekly and daily expected moves? So Spotgamma does provide levels. That's not what I'm using here. I'm using my own levels that I get from a Thinkorswim options chain. Let me show that quickly. Go to SPX, go to an options chain, and I'm getting that information over here. So for example, this number right here, right now at plus or minus 24.6, that would be the daily expected move for tomorrow. So that's where that information comes from. You should be able to get that from any trading platform with an options chain for SPX. All right, that is, and for weekly, actually I use I have a script in Thinkorswim. Let's go back. But you can get this from an options chain as well. I just have this script. So these lines right here. So this is the lower and upper edge of the expected move for last week. And note that SPX traded again massively above the upper weekly expected move last week. And then the purple lines again are just showing that what I lay over on top of this. So you can get this information if you have a script or it comes from options chain as well. So pretty easy, just to add and subtract that from the closing price. All right, let's take a look at Bookmap now. And at Bookmap, I have Hector asked, that script is on pin message. No, that is not mine to give away. I got that from another organization, so it is not mine to provide to anyone else. All right, let's take a look at Bookmap now, and I have a couple of levels, columns of levels here. First of all, this is the Spotgamma cloud notes, and then I have my own C levels, cloud levels. This is what I'm using. So I have this SPX levels, and JEC. I don't think the script that I'm using is freely available. Unless you're a member of the organization, the trading organization that I belong to, then they make all of their scripts and all of their information available to members. That's where I got it. I won't mention the name here. Yeah, it's probably easy to write. You can, you may write your own, but it's again, this is not mine to give away. All right, let's move on. So we have what we have here is, first of all, the SPX levels. So there's the volatility trigger that somewhat acted as support this morning. And then the SPY levels. There's the 436 large gamma 2 level. Also the SPY 435 absolute gamma strike. And note that level did move lower from yesterday. Moved down from 440 yesterday to 435 today. And that has been a key strike in recent days, mainly acting as support. All right, so those are the levels that are in play. So again, primarily the SPX 43.55 volatility trigger as support, and the SPY 436 large gamma 2 level acting as resistance. And we'll talk about setups in a few minutes. So those are the levels that are in play for today. Slight shifts in levels for the S&P 500, volatility trigger for SPX shifted higher, absolute gamma strike for SPY shifted lower. All right, let's take a look at NASDAQ now. So note here, again, S&P 500 trading in a range today, and much more of a trend day up today in the NASDAQ. So levels that are in play for today in the NASDAQ. Let's take a look first of all at a chart showing the levels for QQQ. This is a 1-day, 1-minute chart. And really the level to note here is this volatility trigger at 364. And price has really, after the sharp move up in the morning in the first 30, 45 minutes, price has really oscillated up and down around that level. Let's go back to Bookmap now. Go back to NQ. So levels that are in play above the 364. So again, I've got my cloud notes here, and I'm showing QQQ levels and also There's the upper daily expected move. That's for NQ. And also the NDX 15,000 level that did act as, that cluster of levels did act as resistance earlier today. The 365 level for QQQ, upper daily expected move, and the NDX 15,000 level. And note now that NASDAQ is above, trading now again above its lower weekly expected move. All right, so those are the levels that are in play for the NASDAQ. Again, we'll look at setups in a few minutes, and note that bullish order flow has been very bullish in NASDAQ today. All the lines in the subchart are rising. CVD, cumulative volume delta rising. Large traders buying with iceberg orders shown by the rising light blue line, and then also buy stop orders fueling the move higher. And the numbers here, cumulative numbers, all showing positive for the day. So very bullish order flow for the NASDAQ, although I did post a short setup. I'll talk about that in a few minutes. That was I posted that just because of the large divergence in hero and price action. All right, so that's the NASDAQ. Shifts in levels for NASDAQ. There were no shifts in levels for NDX. And then for QQQ, the only shift was the put wall shifted lower from 362 yesterday to 355 today. And Sampan asks, from options chain, can it calculate for any equity daily expected move? So if you're just using an options chain for equities, most equities now have options that expire at the end of the week, so you can't get a daily expected move from the options chain unless you're looking on Friday. But that is easy enough to calculate. Just you can do a Google search for options expected move, and you should get the equation. It's just price times implied volatility times the square root of the days to expiration divided by some people use around 250 for trading days, or you could use 365. Or you can, there are other ways of doing that. So maybe JEC can chime in on that. All right, so that is the NASDAQ. I've talked about shifts and levels. Let's take a look at the Vanna model now to see how market makers are positioned at the beginning of the day. And we'll take a look at so this is the Vanna model. We'll take a look for SPX, SPY, and QQQ. What this chart is showing is market makers' delta notional or delta exposure on the vertical axis and how it changes with price, shown on the horizontal axis. There are two curves on this chart. The light gray is showing how market makers' delta notional changes with changes in price only. So what this is showing is, as price increases, market makers will need to sell futures to hedge their delta exposure. So that's typical of a positive gamma environment. And then this purple curve adds implied volatility to the equation. So that's showing how market makers' delta notional changes with changes in price and implied volatility. And that change in delta with a change in implied volatility is the Vanna effect. And that hence the name of this, the Vanna, and that's a second order options Greek. So this is showing as price increases, market makers will have slightly less delta notional to hedge, as predicted by the delta only curve. On the other hand, as price decreases, they will have significantly more delta to hedge as price decreases. And this is typical on the left side of this curve of a negative gamma environment. All right, let's take a look and see where SPX is trading now. I've got SPX at 43.71. So let's see if we can find that on the chart here. So that's somewhere between these two lines right here. So about right at this intersection. So what this is showing, and note that SPX is still in a positive gamma. Market maker's position for SPX is still positive. And this is showing there may be a slight tailwind as price increases, and as price continues to increase, market makers will have to start selling futures. Then on the other hand, if price decreases from here, market makers will need to sell futures to hedge their delta exposure, and that could accelerate any move lower. All right, let's take a look at SPY now, and note that SPY gamma notional is negative. So this curve is more typical of a negative gamma environment. And SPY is trading around 435, right at that absolute gamma strike. So that's right here, also at that intersection. So this is showing as that price increases, market makers' delta notional will decrease, and they can buy back some of their short futures. On the other hand, price decreases, they will have to sell futures to hedge their delta exposure. So right now, market makers' position on the gamma curve is negative for SPY. That means that traders are long puts, market makers are short puts. And as price increases, those puts will lose value, market makers' delta notional will decrease, and they can buy back short futures. Let's take a look at QQQ. And gamma notional for QQQ is also negative. Right now, QQQ is trading around 364, so right around that volatility trigger that has been central today. So note that for QQQ, let's see, I'm going to go take a look at Bookmap. Let's see where. We'll take a look at QQQ here. So QQQ at the low today was just above the 360 absolute gamma strike. So that's right around here where I'm holding my cursor now. So this morning, and this is why it's so important to understand how market makers are positioned. So this is the starting point right here this morning. Market makers' position on the gamma curve was negative, and as price increases, market makers can sell some of their short NQ hedges as those puts lose value and their delta notional decreases, and they can buy back their short futures, their short future hedges. So that was definitely helping to fuel the rally this morning. That's called a put Vanna rally. So again, for QQQ, market makers' position on the gamma curve is negative. Traders are long puts, market makers are short puts. As price increases, market makers' delta notional decreases, and they can buy back their short hedges. And that was again helping to fuel the move higher in NASDAQ this morning. All right, let's take a look at the data behind that. And I'm going to take a look at gamma notional. Whoops. Hold on just a second. All right, so I'm going to take a look at gamma notional. For SPX, SPY, NDX, and QQQ. So note, as I mentioned, gamma notional for SPX positive, but definitely lower than yesterday. So gamma notional has decreased the last couple days. For SPX, still positive, and for SPY, that number has become more negative starting on Tuesday and becoming again more negative now, down to minus 1.368 billion. And NDX I don't pay a lot of attention to. That's pretty insignificant compared to the other numbers. And then note the gamma notional for QQQ is negative, and that has also decreased from yesterday. All right, so Hector asks, could you tell me if I understand correctly, futures is more risk for handling big capital on position, where options allow you to move high capital with less risk? I think for escalating fast is better futures and then invest through options. Makes sense? No, I'm not sure I understand your question. So let me just clarify what I'm talking about. Traders buy and sell options, and market makers in the index products, the S&P 500 and NASDAQ, options market makers buy and take the other side of those trades. So they're buying as if traders are buying puts, market makers are selling puts, and that's a positive delta position. So they have to sell futures to hedge their delta exposure. That's the most efficient way for market makers to hedge their delta notional. So that's all this is. Traders buying and selling options, market makers take the other side. They want to remain delta neutral, so they have to buy and sell futures to hedge their delta exposure. So this is with market makers. That's what I'm talking about now. All right, so this is the basis of my planning, my positional analysis. Based on this, I was still looking for more of a range day in the S&P 500 or potential. So that's based on SPX, SPY, quite large negative gamma notional, but definitely for the NASDAQ, QQQ gamma notional also negative. So this move higher, especially looking at the gamma curve for QQQ, makes sense with the put Vanna tailwind for the move higher in the morning, and also just dip buyers coming in. So let's take a look. I'm going to go back to Thinkorswim here. So this is the S&P 500. We can take a look at NASDAQ. This is just a heat map, and you can see that the Magnificent Seven, I guess with the exception of Meta, are all moving higher. So when these stocks are green, NASDAQ is going to go higher. This is the bulk of NASDAQ. I guess well over 50%. It looks like all these stocks are participating except Nvidia and Meta, and a very strong day for Amazon. We'll take a look at that in just a minute. So Red Panda asks, please have a word on why you prefer QQQ Vanna model rather than NDX. We can take a look at that. I normally don't look at the Vanna model for NDX just because the options position for NDX is is not very large. You can just see by this gamma notional here that, for SPY, for example, we're talking about 1.37 billion versus 8.5 million for NDX. So NDX, and especially even compared to QQQ at 389 million, is insignificant. So I just normally don't look at the Banner model for NDX. Yeah, NDX volume is low. It's a big index. Bid-ask spreads are wide. Now I do look at the hero signal, the combined hero signal for NASDAQ that combines NDX and QQQ. But other than that, I don't look at the NDX Vanna model. This QQQ Vanna model provided much more of a clue about the rally potential today in the NASDAQ. Combined with, and we'll see in just a minute when we review some setups from this morning, we'll see that call buyers were back in the large cap tech stocks. All right, so let's start with some setups now, and let's go to the S&P 500 first. What this chart is showing is SPX price shown with the white line and the hero signal shown with the purple line. And this is showing options trades and market maker hedging flow for a combined signal for the S&P 500, SPX, SPY, XSP, and ES futures. All right, and this is showing a very strong correlation between this total signal and price action today. This is something that I haven't seen quite this close a correlation in quite a while. Let's take a look at. I'll take a closer look at this chart in a minute. First, let's take a look at the individual components. So first of all, SPX. Straight up, traders are taking positive delta positions in SPX. They have been all day. And SPY pretty much the opposite, especially starting in the afternoon. So SPX was positive, and this number notional value for SPY negative. And then ES futures also positive like SPX. So let's take a look at the combined signal now. I'm going to zoom in on this chart. Talk about setups. So really the way to go today was long. And it took a little while. Remember, SPX we saw on the Bookmap chart and also on the SPX chart, chopped around the 43.55 volatility trigger for about 10-15 minutes this morning before moving higher. And note that options traders came in just a couple of minutes later. Note by the rising hero line confirming that move higher. So in the morning there were hero was confirming long and short setups. So here would be the short setup. Hero makes lower highs. Price makes slightly lower high. So that's around 10:30, which is kind of a typical turnaround time. The close of the first hour, and then a reversal higher again. Just a few minutes later. All right, so let's go take a look at Bookmap now. Look at the S&P 500. And actually, before I do that, before I forget, I do want to do a follow-up from yesterday. So this is, I was talking about this right at the end of my session yesterday, right around 4:30, watching ES move up between the 436 level, the SPY 436, and that is also the SPX 4376 level, and then the SPY volatility trigger. And I believe what I said was I was looking for a reaction, a move at 437 or 436. So what actually happened is, first of all, let me point out that there were some traders in here. This is shown by the liquidity in the Bookmap heat map, showing that there some larger traders were in there with sell orders front running this 437 volatility trigger. And note that price did reverse almost exactly at that level, and there was a stop run up into that level, a sweep up into that level, and then aggressive sellers started coming in and moved price all the way down to the 435 level. That today, that's the SPY 435 level, that is now the absolute gamma strike. So that's the setup that I was watching yesterday, and that played out really as I expected. That SPY 437 level acted as resistance, and price moved lower. And if you missed that initial entry, here was a pullback for another good setup, for the short setup. And note at that point that the order flow was pretty clear to read that sell stop orders were in, and also aggressive sellers, shown by the falling stop line and the cumulative volume delta. All right, so that's from yesterday. Then let's get back to today. So today we're looking for a long setup from this morning. Let's zoom in on the morning session. And we'll go over this quickly and get to the live market. So this was after the breakout of the volatility trigger. Aggressive buyers started to come in, and actually one of the keys to this setup, probably the key to the setup, were these iceberg orders. Actually coming in before the cash open or right at the cash open. That's shown by this rising light blue line. Let me scroll over just a little bit more. So before the cash open, even around 9 o'clock, large traders coming in with iceberg orders. So that's shown on the subchart by that rising line. And also here, these are large orders. Over 2,000 contracts, multiple executions. Here are 700 contracts. And that is often a very good sign that price is going to go higher when larger traders are in there buying with iceberg orders. Here's another one, 800 contracts, a lot of executions. So there's your really the first clue. And then after the market opens, we saw that traders started options traders started taking positive delta positions. And then the reversal lower at the 436 large gamma 2 level. Let me just scroll over a little bit so we can see this. And note how these SPY levels are so important. You know, we just saw yesterday that the 437 volatility trigger, almost to the tick, acted as resistance. And then here's the SPY 436 level. That's a large gamma 2 level, acted as resistance. So that was a target for the long setup in the morning, and then resistance. And this looks almost identical to the setup from yesterday afternoon that I just showed. Lower high, there's your entry point for the move lower. Back down almost to the cash open price, just above the 43.55 volatility trigger. All right, so long, short, and short setups this morning in the S&P 500. All right, so Sampan asks, what is 9 and 30 signifies in these orders? I believe that is, so the E stands for execute. So the first number there, you're showing 800 contracts executed, and my understanding is that is 9 transactions. So if I zoomed in, if I spread that out, I would see those individual transactions. But as I zoom in and look at a larger slice of time in Bookmap, it aggregates those into one number showing the number of transactions. So I believe that's what that is. You can check in the Bookmap knowledge base to confirm that. All right, so that's the S&P 500. Let's go to the NASDAQ now. So NASDAQ this morning, pretty easy read. Note the bullish order flow. I pointed that out before. And price reversed higher right at this NDX 14,800 volatility trigger. So there's the support at that level, the reversal higher. Just at the cash open, price took off straight up shot from the cash open. Let's go take a look at Hero, see what options traders were doing. And yes, that means that 800 executed and 2,493 executed. Yes. All right, let's take a look at Hero for NASDAQ. And just like the S&P, this is S&P 500. This is a combined signal for NDX and QQQ. So this is showing that right from the open, we'll look at the first couple of hours of trade here. Right from the open, options traders we're in here taking positive delta positions, and price follows higher. So there's the long setup in this morning. The thing was just it was moving so fast, try and find a way to get long. All right, the second setup is a short setup, and this is what I posted in Discord, is this divergent setup. Now, it really didn't play out very long, but it was a clear setup showing the sharp drop in Hero, traders taking profits with their options or starting to take negative delta positions for whatever reason. And then price followed, and there was a break below the 364 QQQ 364 volatility trigger, and that was good for I don't know, 50, 60 points or so in the NASDAQ. All right, so let's go take a look at Bookmap. Zoom in on the morning session. Really just these first two setups. So here's the blast off from the 14,800 volatility trigger NDX, right at the cash open. find a way to get long. Looks like there was some pause at the QQQ 363 level. Note the very bullish order flow shown by the rising icebergs, cumulative volume delta, and stop orders. So there's the long setup, and price starts to chop around the, whoops, wrong tool, chop around the 364 level, and order flow kind of levels off, stop orders CVD, and then price breaks below the 364 level again as options traders really around 10:15 started taking negative delta positions, and it took maybe 20 minutes or so, but price finally follows lower, breaks below the 364 level, and again good for maybe 60 points in NASDAQ. But again, that was short-lived. And of course, again, with this bullish order flow, the way to trade NASDAQ was definitely long for the most part today. Let's go back and take a look at Hero. And let's just see what, whoops. Zoom in a little bit here. So in the morning, traders were buying calls and buying puts. Call buyers were winning. This notional value around 418 million versus minus 332 million. So slightly more positive, positive notional value for call buyers. And again, we saw the bullish order flow in Bookmap, helping to definitely confirm the long setup. Now it looks like options traders are starting to fade this move. We'll take a look at the live market in just a moment. I'm going to go through some stocks quickly. So here's Amazon. That was the brightest green on the Thinkorswim heat map. Call buyers. So call buyers are back in Amazon, helping to drive price higher, helping to drive NASDAQ higher. We'll go back to Bookmap. Take a look at Amazon. All right, if anybody has any stocks that that want me to take a look at, let me know. And RJ says Amazon call wall holding thus far, and that is correct. 130 is the call wall for Amazon, and it's doing its job, acting as resistance. So it was a great target this morning for the sharp move up as traders were buying calls. And let's just take a look at a Hero again. We'll zoom in on this chart. So here's the call wall at 130, and note the blue line for puts. They are selling puts, but that is pretty insignificant compared to the call buyers. And really, the call buyers have somewhat leveled off right around here. So it became slightly less aggressive here, and then price has again found resistance. And RJ says, would you consider selling 130 calls? And I would not sell naked calls in Amazon. If you want to, if you do want to, if you assume that level is going to hold, then perhaps a call spread. So I would not sell naked calls in Amazon, but a call spread would be, I guess, a valid trade. And I might go, I would have to look at an options chain, but I would might go up maybe a couple of strikes just to give yourself a little breathing room. All right, the next, let's take a look at Meta. And in the morning, call buyers were in there in Meta. And that's shown by the rising orange line, rising price. Let's take a look at Microsoft. A little bit more clear in Microsoft. Call buyers definitely in from the open, and they continue to buy calls. Again, I'm looking at the rising orange line, the 340 level, the call wall, potential target up above. Maybe not for today. Let's go take a look at Bookmap. We'll go to Microsoft. So there's the 340 call wall above. Pretty sharp move this morning up to the 338 level, and then price gradually moving higher, making higher lows as price tries to get up to the 340 call wall. All right, Truman wants to look at Tesla. So we'll take a look at Tesla, and let's go to Hero. So in Tesla, traders are buying calls and selling puts. And I think there was news for Tesla today. I think some analyst downgraded Tesla yesterday. Another analyst downgraded Tesla today. And for the call buyers, put sellers, options traders, doesn't matter. Any dip they're going to buy in Tesla. All right, let's take a look at Bookmap. And we'll get to Netflix in just a moment, second wins. All right, so here's Tesla in Hero. Let's take a look at Bookmap. So pretty good rally today in Tesla, moving up toward the 265 liquidity, and that would make it about a 15-point move higher in Tesla. All right, so I'm going to move on to NVIDIA, and we'll take a look at NVIDIA in just a moment. The first thing I want to take a look at is And Netflix I do not have in Bookmap. So we can take a look at it in Hero. So as usual, there's a pretty strong correlation between hedging flow, options trades, and price action in Netflix. So net overall, slightly traders are selling calls and buying puts. Both those numbers, notional value for puts and calls, are negative. All right, let's go to NVIDIA. And so far today in NVIDIA, traders are selling puts and buying calls. Take a look in Bookmap. Nice uptrend in the morning. Let's check on gamma levels. So the only spot gamma level in play today is the 430 key gamma strike. And that appears to be right where NVIDIA is trading, right at the 430 key gamma strike. All right, let's go back and check on the live market. We'll take a look at S&P 500 first. So right now, ES is heading back up to that 436, SPY 436 level that did act as resistance earlier today. And to me, this order flow is not especially bullish, other than looking at the short term at the volume dots. So this kind of looks like a little small stop run up to this 436 level. And I can see that with this green dot plus just all the aggressive buyers coming in. You can just see all the green volume dots. Again, this looks like the setup that we were looking at around 2:30 yesterday afternoon, except it was a point higher in SPY at 437. Let's see what options traders are doing. Go back to Hero, the total signal, S&P 500. And they are buying. They're taking positive delta positions. Let's just take a look at a 30-minute rolling window period. So I would be a little cautious here if I was looking for a short with this rising hero line here. And again, we're on a 30-minute look back period. Let's take a look at NASDAQ. So NASDAQ, this is showing a different picture. Again, remember we're on a shorter look back period, showing that traders are starting to fade this move. Options trader taking negative delta positions. Hero making a series of lower highs. Let's take a look at NASDAQ. So NASDAQ up at this is the level that has acted as resistance earlier in the day, more or less. Remember, NASDAQ's very big, very volatile, can often overshoot levels just a bit. But this cluster of levels here, the QQQ 365 upper daily expected move and the NDX 15,000 level did act as support earlier. So right now we know that options traders are taking negative delta positions, but order flow still appears to be very bullish. So if I were looking for a short here, I would definitely wait for a lower high to confirm that. With NASDAQ, it moves enough that you can you can definitely wait for a confirmation. All right, my time is up. We're keeping an eye on S&P 500 at potential resistance and NASDAQ at potential resistance. So now it looks like the S&P 500 has broken up above that level, and larger traders are fading that move with iceberg orders, not huge size, and buy stop orders helping to fuel the move higher. All right, so that's it. My time is up for today. I want to thank you for your questions and comments. Sampan, Hector, Red Panda, and in Discord, Truman and Second Winds. Thank you all for watching. Thanks for your questions and comments, and I will see you tomorrow. Thanks. Bye.